to me, when you are buying cum rocket, you are not an investor.
I think any investment in something called Titscoin is investing.
No, why?
And
What the are you talking about?
listen, okay, Boomer.
Hello, everyone. Welcome back to Zeros TV. In the short of it, I'm joined today by Carson Block of Muddy Waters, David of Wolfpack Research, and a new guest, Soren Aandahl of Blue Orca Capital. Soren, thank you so much for joining us here.
Thanks for having me today.
All right, so I know we're going to talk about a whole bunch of different things. Do we want to kick it off with you, Soren? What are the topics that you think are most important for market participants to be being aware of, especially with an angle towards short selling?
Well, I think it's just managing the volatility at this point. I mean, we see these wild swings in the market in the last week or so, and we're also seeing just the flows of funds from speculative assets like crypto into meme stocks and then back out. So just trying to have to ride that wave and manage that risk is just going to be important, I think, for the next couple of weeks.
Yeah, when you talk about the outflows from these speculative assets, like where are these outflows landing? I keep on wondering, like, what is the next level of speculation after Dogecoin, after Cum Rocket and Titscoin? What is the what is the next level of wild that we're going to see? Is it just going to have to be like Ponzi coin, scam coin?
Like OnlyFans coin, probably. Like, it's just, who knows? We've seen them all promoted now. I think there's zero barriers to entry on the coin market. The options are never ending, provided there's money keep flowing into the system. I don't know. What do you guys think about it?
I mean, I think the only limitation on supply is, how many good names can be conjured up. So I do like Fist Coin for the next one, though.
Fistcoin. Well, as much as it's also the low barriers to entry for creating these new coins, these new speculative assets, it's low barriers to entry for investors too. And that means a whole new crop of young investors, early investors are starting out in these highly speculative assets, in these meme stocks, meme coins. And it begs the question of, we all know that there will be some end to this. And what happens to those investors, and how will it affect their view of the market? Do you think it's going to jade investors eventually when they get the other side of this?
Can I jump in real quick also with just like a pet peeve of mine when we talk about all these things is referring to the people who are buying and trading them as investors. And I'm not being facetious here, but I really don't know that, and maybe this is part of the philosophical component to the question you just asked, Max, but I mean, can you call anybody who's buying Dogecoin an investor? I mean, really?
Well, that's a good question. But the same thing, if you go back and you read like Ben Graham, they talk about the difference between a speculator, a smart speculator, and an investor, and that difference. And that line has certainly been blurred. I mean, I even think about it with most public equities. Most people, when they buy a share of Apple, they think that money that they just invested in the company. All they've done is trade with another person, trade a stock certificate, but that money hasn't actually gone into Apple. So, I mean, much of the investing that we do is really speculation. And I think bringing that to the market.
Can I jump in here? I think that when you look at the definition is definitely in the eye of the beholder, but I think that when we look at speculators, speculation is just investments that you don't understand or you don't like. I think that the label, Carson, I don't know what you think about this. When you label a certain class of investor speculator, I think it's it seems right in those circumstances when you're looking at these coins, which you don't think has any value. But there's certainly, it's a continuum, but there's so much, that kind of gives an imprimatur to authority of the regular type of investing that, like, for example, that a hedge fund that just goes long a bunch of stocks does. I don't think that they're speculating they may have the veneer of fancy models behind it, but is it, do they believe less in the underlying asset class that it's going to appreciate?
Well, I mean, but if you're saying, well, I'm going to buy this basically because it's going up, I mean, that's gambling, right? So if people who do that are investors, then, so are people who sit in front of slot machines in Las Vegas, or even, worse, State Line, Nevada, and, and throw their money into those things. So, I mean, at some point you have to draw the line. And I don't know that, I'm not saying that if they're not investors, then they must be speculators. I mean, I've had a hard time when I've done interviews about SPACs and some of the things that we've shorted, where like I've had a hard time, characterizing, or occasionally I would stumble and refer to the people holding these things as investors when I think that reality they're not. So I just call them retail for the most part if I'm discussing individuals. So retail participants or holders, but I don't know. I mean, maybe this is just semantics and I'm getting wrapped around the axle about nothing, but to me, when you are buying Cum Rocket, you are not an investor.
Now that we've determined the definition we want to use for investor versus speculator, I guess we'll call them retail. So what happens to retail? What is the effect of this boom and of the eventual other side of that on retail, and how will it affect market structure moving forward? Are they going to be addicted to speculation, and this is something that we have to take in as a part of this, or is this going to jade an entire generation of retail and move them out of the market? Is this just a dip of their toe, or are they, do we have speculators here to last? Dan?
I think any investment in something called Titscoin is investing. That's my opinion.
All right.
Look, I think when you experience the kind of pullback that past generations are used to experiencing that we haven't experienced really in the past 10 years, it is going to change a mindset that stocks only go up, investments, whether it be Dogecoin or whatever else, only go up. We've not seen that yet. That's yet to be seen. We've got to wait and see what this generation's mindset's going to be once they, as Mike Tyson says, everybody's got a plan until you get punched in the face, and then we're going to see what the plan is.
Well, we did get that first punch in the face, it feels like, last week off of some news about, one, the IRS, I think, they want information on any crypto transaction over $10,000, as well news of crackdowns in China. There's only so much more regulation that's going to come out. Is this something that you think every single time we get a regulatory headline that there's going to be some pressure on Bitcoin? Are there more punches coming?
Bitcoin's very volatile. Here's a news flash for you. It's very volatile. It'll go up when Elon Musk has something to say. It'll go down when some regulatory environment starts to opine on taking their share of it. The fact that China is never going to allow any kind of digital currency they can't control should not be news to anyone. That's not going to happen. That's not how their government is structured. So I don't really think this might have been a slap in the face, but this wasn't a shot between the eyes. I mean, when you start to see this thing really get cut in half and then half again, then you're going to see people really starting to say, oh, wow, well, I'm not playing in a fair game. No, this is not fair.
I've got a friend who's he's got a fintech company, like a real one, and he's not in the total douchey part of fintech, which is probably most of it. So I respect what he has to say. He owns some Bitcoin. I mean, for him, it's it's kind of small portion of his overall wealth. But I was asking him, okay, what's the value there? How would you value it? And he said that the value of any of these blockchain-based coins is the present value of, I think what you call them, gas fees or gas charges. So I didn't know what that was, but that's the blockchain usage charges. So he said the present value is that. I said, okay, so now with Bitcoin at wherever it was at the time, like 40,000, and and I'm assuming that the present value of those gas fees is just a fraction of that. I said, does that mean that everything above that present value, like the vast majority of the value here, is tulips? And his response was, yeah, it's tulips. So, I mean, if you want to understand what happens to this generation, what happened in the Netherlands when people realized that tulips are just tulips.
It doesn't really help the older generation, I would say, that everybody you talk to that is a so-called Bitcoin expert says the only place you should put your money is BTC Bitcoin. The next person says that's going to crash. The only place you should put your money is BSV. That's the only one that's going to make money. Next person you speak to, that's going to crash. You should only invest in Ripple. And it's just a headache to the 60, 70 plus year old who still has a lot of money to play around with. I mean, they could put 10% of their portfolio in Bitcoin right now, and that would be impactful. That would be meaningful to that market. But they're not going to, because they don't understand it, and everybody tells them what they're investing in is either great or
I feel like I feel like the comment section for the video right now is just going to be like, "Okay, boomer," again and again and again.
Well, yeah, except
that's fine.
guess
Listen,
what? We've seen this a few times, guys. Like,
Yeah.
I mean that's the thing. You know, over the past year or so, just as an activist short seller, and you know, curious what you guys think, but because there's been so much more retail participation, there's been a lot more trolling. You know, it's like the trolling, you know, as far as I can tell in my feed has gone up. And it's like every time, you know, they act as though we, you know, like I haven't seen this exact thing before, and you know, like I haven't had, you know, 10,000 other guys say the same to me in the past about something that ended up imploding. And you know, and yeah, I felt like some of the comments that I get are kind of those okay boomer comments. I mean, I actually think literally some people have written okay boomer, and you know, which I think shows that they're really, really bad at math.
That was my bad. That could have been me.
Yeah, but anyway, so yes, they
yeah,
might okay boomer the out of us here, but I mean, come on, like we have seen this before, and you know, someday you can tell your kids how you were such a dumb because you had $500,000 of free money that landed in your lap, and you didn't take it off the table because you thought it would become $2 million, and they have to borrow money for their college educations.
first of all, I'm a Gen Xer, so let's get it right. Second, I'm not anti-Bitcoin. I just, I want more people to invest in it actually, and I'm just asking that this be a clearer picture for an older generation so that they can invest in it as well.
No, why?
And
But what the are you talking
I
about?
mean,
Yeah.
listen, there could be look,
What?
there can be diversification.
What do you want your AARP card for Bitcoin investments?
I mean, look, if
Sell
they're
treasuries.
investing, they're
Sell your
investing
treasuries
through
and
a
dividend
finance,
stocks and buy
they're
Bitcoin.
investing through a financial advisor, not themselves, right? And they're in some cases they're directing their investment. And I don't see that it's a bad idea for anybody of any age to have a few points in Bitcoin. You know, there are more speculative bets that they're making out there right now on overvalued companies, and why not participate in part of it? The fact of the matter is, what is the worth of a dollar right now, right?
Company's more real than Cumrocket, dude. Like, I don't care how fake the company
Yeah.
is.
Look, I don't know why you have to go from BTC to Cumrocket. I mean, like, there is something of a difference between the two.
Did he get there too fast?
Cumrocket claims to have a use case.
Bitcoin is the Berkshire Hathaway of.
Listen, okay, Boomer, just step back for a second. All right? I'm just saying a few points here that they could put into it.
treasuries,
Yeah.
Sell dividend stocks, buy Bitcoin.
Well, what is a dollar worth? It's worth the kind of faith that people have in the American, treasury system and capitalism. I mean, I don't know, $30 trillion in debt. I mean, I can see why people have a
Pay your
problem.
taxes in dollars.
Yeah,
Don't pay your taxes in Bitcoin.
yeah.
There will always be that value.
Well, and it's more than just the debt. I mean, there's however many millions of acres of arable land, 2 giant coastlines, big defense. I mean, that's not what Bitcoin has. And you've been focusing on the older investor, but as a younger investor myself, the information that it's out there for us, I mean, it's not just the older generation of investors who find it confusing to invest in crypto or to try and understand the value because of what you were talking about in terms of the polarization. It's one coin or no coin. There is no middle ground of, I think this is an asset class worth exploring, having some reasonable percentage, but that is not the way the rhetoric is structured. I want to segue into a different conversation. We've been talking about adoption and people's introductions to investing, whether it be crypto or some of these meme stocks. But a lot of people's first introduction to fraud And fraud in markets came with that documentary about Elizabeth Holmes and Theranos. And we're starting to come full circle with that story. And Soren, you wanted to talk about Elizabeth Holmes and her trial and why that's important even after the fact, even after we know that that company was a colossal fraud. Why is it so important what happens in this trial?
Hey, hang on. Elizabeth Holmes committed fraud?
Allegedly.
Well, let's hear it.
I think it's really interesting what we're going to see in the trial coming up. But I think what's more interesting, and the reason that I think it's an interesting topic, is in the class that I teach at McCombs on fraud and folly in the financial markets, I asked the class, I said, what percentage of you think that she is going to jail? And the answer shocked me, because I interned at a U.S. attorney's office. I was trained as an attorney. For me, she's going to go. It's a done deal, and she should go down hard. I mean, this was a fraud, not only a fraud from the beginning. You could even argue that something like Enron, where Enron starts as a legitimate business and then gradually it's corrupted, some sort of like Anakin Skywalker narrative or something like that. That's not, she was lying from like day one. But when I asked the class, the number of students that said that they thought that she would go to jail was under, I think, 25-30%. And the number of students that thought she would go to jail for more than like 3 years was zero. It was only me. And I think that that's really interesting, because it goes to, it says something about the cynicism with which people view the market. It doesn't say anything about Elizabeth Holmes. It says something about like how an entire generation views a system, and whether that system is actually, there's a deterrent impact, whether misconduct is punished. And it's a shocking answer, because I think that there's no belief and there's no faith that this type of conduct will be deterred or punished in any way.
I actually happened to participate in Soren's class that day. It's a great class, by the way, and really heady, smart kids. And Soren's correct. He's the only one that predicted that Elizabeth Holmes would do more than 3 to 5 years in jail, including myself. I was more with the students in saying, yeah, no, I don't think she's going to do more than 3 years in jail, 5 at the most, if any. And Soren comes from the Enron days when he worked on that case, didn't you? Kind of.
Got coffee as an intern for someone who worked on that case.
That is working on that case. That's a lot more work than Carl does in a given day. So, but the point is, people went to jail back then. And the cynicism that the students have in your class, Soren, is well earned. They should be cynical about whether white collar crime, especially when you get into the billions of dollars, equals jail time, because I can't see where it has.
It's kind of funny because I'm not sure that Gen Z is more cynical about this than Gen X or than we are, because we've seen what happened. We saw how there used to be accountability, and then that went away. And Dan, I was listening the other day to when you interviewed Jordan Thomas, the whistleblower attorney who used to be
He's a great guy.
Director of Enforcement at the SEC, and Jordan, as well as Jesse Eisinger, who wrote The Chicken Club. I mean, really, they look at the Enron prosecution, the Arthur Andersen prosecution, as the high watermark of accountability and enforcement. But in their view, and it sounds reasonable to me, there was this backlash against aggressive enforcement within the enforcement agencies after that, because they thought that, okay, well, you killed Arthur Andersen, which was a real firm that had, as Jordan put it, I think had gone astray, but there were a lot of people who worked there who had nothing to do with it, and the U.S. government put the firm out of business. And so I guess after that, everybody became very sensitive about imposing accountability. But to me, that doesn't explain why individuals are not prosecuted. So my point being, and yeah, granted, I'm much more cynical than the average person is, but as a Gen Xer, I've seen what accountability is and how when people are held accountable, at least occasionally, and I see where we are today, and I have probably less faith than they that Elizabeth Holmes is going to do real time. I think she'll be convicted, probably. I just don't know that she'll do. I don't know that she'll end up
Well,
serving more than three.
yeah, I mean, that's the question, right? I think that, you look at someone like Skrelly, right? If you want to judge sort of relative merits of the case, like Skrelly gets 7 years for. There's what's interesting about the Skrelly case
For being an,
for being an right.
I mean, really, he'd have got 3 if he was less of an.
3 views less than
I like to think that he went to jail for exposing basically how big pharma worked. That's why he was picked and targeted.
The fact
for
that
this,
that
because
narrative exists
He
is
showed
fucking
he showed
incredible.
exactly how these patents can be exploited to
Yeah.
extract value from the consumers. He broke the rules. He showed how the game is played, and that's why he went down hard.
Well, he did. Look,
I mean,
he did. I mean, he did a lot of wrong with his hedge fund. I
Yeah.
love how he like totally DK'd BAML on like $10 million or something like that. But that's not even why he was prosecuted. I mean, when he had Retrofin, I remember we were really interested in Retrofin just because this guy gave off all of the, I guess, signals of there's something really fucked up here. And what we thought could be the problem was not actually the problem, but yeah, he was using money from that to repay hedge fund investors who lost him. Like, the guy is a criminal. I mean, why did he get prosecuted though? Yeah, I mean, because he was dumb enough to go on TV and sound like a moron comparing himself to Toyota during the campaign, the 2016 presidential campaign.
So Hillary Clinton comes out today citing the story about you guys in the New York Times, causing quite a stir in the biotech industry. Did you not expect a 5,000% price increase would result in that kind of attention?
Maybe, maybe not. I mean, it really depends on how focused people want to be on the industry. You know, at the end of the day, there have been much larger drug price increases by much bigger drug companies that actually, you would argue, large multi-billion-dollar companies with lots of cash don't necessarily need to do something like this. Turing is a very small company. It's a new company, and we're not a profitable company. So for us to try to exist and maintain a profit, I think is pretty reasonable.
But let's be clear, like, he's not a hero. He is a criminal.
I'm not saying he's a hero, right? But what I'm saying is that what's interesting about the Skrelly case, and I think that the government proved beyond reasonable doubt, no question, that he committed fraud with the hedge fund by using the Retrofin money to pay back, and then he was lying to his investors about the earnings, about the returns of his fund. But what's interesting is that people did not lose money with Skrelly. They were made whole. And that made that case a little bit fascinating, because usually we think about the role of deterrence and the role of white collar crime, and the reason that like cops exist on the market is because when people lose, they should be punished. But then you compare that to someone like Elizabeth Holmes, where the losses are not only staggering, but it was just a conscious misrepresentation of the core of the business from day one. Like, it's interesting to me that we think that Skrelly, okay, he's a jerk maybe, and he should go to, there's this collective understanding that he should go to jail, but maybe not. I mean, look what Max said. Max gave the narrative that this guy's kind of an underground hero, which I've heard as well. I don't agree with that, but it's interesting that he gets this punishment. But when we look at Elizabeth Holmes, and maybe it's because he did it in New York and she did it in San Francisco, and maybe because it's the tech versus finance, but
she's also a much smarter defendant, right? Like, Shkreli is on trial and he's saying the dumbest things, and he puts out a bounty on Hillary Clinton's hair, and Elizabeth Holmes is pregnant. Like, she's doing everything right, to avoid, and that's part of how I handicap no more than 3 years, because she's a very good defendant. I mean, she's a psychopath, and and she's just good at playing a human. I don't have an opinion on whether Shkreli's a psychopath or not, but he's not good at playing a human, like, full stop.
Well, this is the question I think, Soren, would be great to bring back to your class, which is really what we're getting at here is, do they believe that she should go to jail for more?
He asked that question. They
Yeah.
believe she should.
they
Everybody
believe
believes
she should.
she should. Okay.
That's why it's so cynical, right? Because they believe that she should, they just believe that she won't. And what's interesting and what's so meaningful about that conversation is just, what does that say about how students that are coming into the market, they're at the beginning of their careers, they should be the most idealistic about the way that the system works. And we're jaded and cynical. We've seen 10 years of this stuff, some of us a lot longer. And there's a total cynicism that the conduct will not be punished at all. In fact, it'll be rewarded in most cases.
I want to segue now into why I'm tired, but today, unlike when I'm usually tired, I'm happy tired because Solutions 30 finally imploded. I've talked about that on Zeros before. Please show the chart. And by the way, just for legal reason or disclaimer, we covered this morning. We've been short this thing 2 years and 1 week, so we took our money and went home, at least for now. But it's interesting because when you look at Europe, and I've had to express this over the weekend, after the Solutions 30 press release. It's interesting because in America, I think there's a widespread, unlike Europe. Europe pretends that corporate malfeasance is very rare and everybody's shocked when it, comes to light. But in America, we are much more realistic. We, I think, understand that corporate malfeasance is common, it's almost everywhere. But the up thing is we accept that. Like, it's very depressing. We're just kind of like, whatever. So Europe, I think, is not even where we are yet. They certainly accept it because they deny that it exists. So, step one of the recovery is to admit there's a problem. But what's also interesting is, I believe Solutions 30 is a fraud, and is also been involved in money laundering. So everything that I say from here on out about Solutions 30 should be viewed in that context, that these are my opinions, that it's a fraud. It has not been proven to be a fraud, but in any event. But so when you look at Wirecard and Solutions 30 from that perspective, Wirecard was shorted publicly by Zatar in 2016. These guys could have taken their foot off the gas, right? I mean, Wirecard made up all these numbers. The business was, I think, like half real, but half fraud. But instead, they said, no, we want to become like one of the most valuable, like the most valuable fintech company in Europe. And they ramped it. And see, if they had taken their foot off the gas, short sellers get their win, Dan McCrum's not as interested because the thing has collapsed, they probably could have gotten away with this, right? But they felt, somehow, I guess they felt that, maybe it's because they're in Europe, that they could get away with it, that they could do this and give everybody the finger. And Solutions 30, again, I feel the same thing. We were publicly disclosed as short because how the regulatory framework works in Europe. We didn't say why we're short, but we had to say that we are short in May of 2019. So here it is 2 years later, finally unwinding. And so my view that it's a fraud, why didn't they just back off and stop growing the business or growing the numbers and just get away with it? So it's really interesting that, especially in Europe, and I think that's true to some extent, but Europe may be more egregious, there's just this mentality of, I can get away with it, and you.
Well, in Wirecard's defense, they did have BaFin captured, so that probably made them feel better.
Well, right, but that's what I'm saying. They felt that they could get away with it, and
Right.
so it's
They did get away with it.
Yeah.
They got away with it for years. Is the lesson here that, like, why didn't they think they get away with it? Maybe the lesson is, like, why did we think they wouldn't? Wirecard, Zatara first published on them, and they almost merged with Deutsche.
yeah.
BaFin did after Wirecard. They were significantly embarrassed by it, and they, at least made some noise that they were going to step up their actions and be more, forward-looking, I guess, rather than backward-looking. Do you believe that there will be a regulatory shift as more of these things come out in Europe? How far along on the process? How many more embarrassments need to happen before there is real change?
Well, again, if step one is admitting you have a problem, we haven't completed step one.
Yeah. Well, Carson, you mentioned they imploded, but we didn't actually get into some of the nitty-gritty of what happened. Why did the market finally come to see it your way?
the company's audited financials were due, its annual report was due April 30th. Now, on April 28th, the company issued a press release, great numbers for 2020, but April 30th came and went, no annual report or financials filed. Then on May 10th, pre-market, it was a Monday, the company announced that they were halting the stock and that it would announce more in the coming days. And then the following Monday, I believe, the company announced that it issued a press release saying that, oh, we're going to explain this on May 25th. And the next day, the AMF, the French regulator, put out a press release saying, no, you need to either file your audited financials ASAP or explain why you won't. So after market closed this past Friday, the 21st, the company issued a press release saying, our auditor EY won't sign the audit, won't issue an audit opinion, and we don't know why. Which, I mean, I knew that whole "we don't know why" was complete bullshit. So Saturday morning, I wrote this report draft in which I was pointing out why I thought that was a lie. Sunday morning, I had to rewrite my draft, but it was for the better because the company issued a press release saying, okay, well, the reason EY won't sign it is EY is claiming that it had suspicions about various transactions and it's concerned that there could be material and pervasive misstatements in the financials, but EY claims that it asked for more access to information from us and also appears to have asked for more steps to have been taken during the independent investigations carried out by Didier Kling and Deloitte Finance. But the company said no. Now the company, when it issued this press release, said, but we've been very cooperative. And by the way, our 2020 numbers were fantastic. And like, that is so amazingly brazen to me. And there's an interesting point there about the board, because usually in these situations, you've got a board that was lazy and inept. So a lazy and inept board by this point in time, when the auditor says, I'm not going to sign the financials or sign the opinion, like heads roll, people are throwing each other under the bus. Management is on its way out or board members are resigning. But these guys are so committed. They're all they all view themselves as in the same little lifeboat here. So, the board is standing behind the management and the company and again, totally on board with these great pronouncements about 2020. And it's like, holy you do not have audited numbers, and your argument for why E&Y is wrong is partly to say our numbers were great. I mean, these guys, assuming that there's going to be a well-resourced investigation, or at least one into them, I think there are going to be some, prosecutions of some sort. Maybe they'll be civil, hopefully they'll be criminal. But yeah, I really think that these guys should have the book thrown at them for, when all is said and done, for making these these bullish statements about their numbers that they couldn't get audited. I mean, that's over the top in my experience.
So I know you've had your bone to pick with auditors before. What is it? I'm sure EY was EY their auditor this entire time?
No. So EY began auditing them in 2019. So for the prior year. Before that, it was for the past blah years, it was Grant Thornton. And what's actually kind of funny is shortly after we showed up short, the FT Alphaville published an article in which they showed, and the company was forced to admit this, that one of its, I think for 2017, the English version of its financials, there was an English version of the auditor's opinion in there, the opinion letter, but it was clearly forged. It was like the wrong logo and the signature block was messed up. So the FT's Alphaville pointed this out, and the company was like, well, yeah, okay, we did a translation, ourselves for convenience. And,
Yeah.
and that's fine, but, it's like, you're like, putting the auditor's logo, the wrong logo, by the way. I mean, that's best part. But, yeah, I mean, somebody, an investor at that point in time should have looked at this and said, what kind of legit company would do that? I mean, why not pay the extra blah $1,000 for the auditor to do its translation or, and issue that? So anyway, yeah, these dudes were from the get-go. These guys have been, to an extent, they've been clowns. But the other thing that is also important to understand, if I'm correct that it is a fraud, it's atypical in that it's really been kind of by 1,000 cuts. So they've done a lot of very small dollar transactions in terms of acquisitions and disposals. And usually when we look at things that are substantially or significantly fraudulent, which again, my opinion, Solutions 30, there's a reasonable portion that's fraudulent. We usually see that there will be these chunky transactions because it's just much easier to keep the books balanced and everything making sense and linking together smoothly if you have fewer transactions. So to do it with a lot of small transactions from an administrative perspective is actually really, really hard. So if I'm right, I mean, just in the, whole fraud world street cred thing, they deserve some, because it kept, I mean, these transactions were below the radar because they were so small. And I think also part of the reason why you had these, genius investors stay long and increase their sizes like Comgest and Franklin Templeton and Swedbank, is in part because they're probably looking at the letters we're writing and the transactions we're focusing on, and they're thinking like, that's a few million euro, who cares? Without, again, I think there's a tremendous amount of intellectual dishonesty on the part of these investors who would refuse to extrapolate these transactions, these examples, to the much wider array of transactions that have occurred. But yeah, that is something that's pretty interesting about.
Do you think that's true? Do you think that there's dishonesty, or do you think it's a lot, or do you think that human beings and investors especially, have a psychological break from admitting that they're wrong or incorrect about something?
Well, I mean, certainly people who have low, I think, who question really their competence, they'll dig in. I mean, we had that with Jim Oberweis Jr. back in 2013,
NQ.
2014 on NQ. Even a year later, he refused to admit he was wrong. He just blamed us for destroying this great business, when it was clearly a fraud. But the people who are more secure with themselves will own up to it. But I think if you rewind, to me, the thing is, it's really what happened there with these investors, is really, I mean, there's this please lie to me culture that underlies so much of the long side today, which is like, yeah, maybe you're not telling me the whole story, but if I, just kind of put my hands over my ears and yell for a little bit when, these short sellers are talking, and then please tell me some more fairy tales. I mean, I really think there's a lot of that in investing today where people they want companies that can bullshit. Like, that's a buy.
It's a sad fact that I've learned over the last 10 years that investors would rather make money on fraud than lose money on the truth.
Yep, no question.
Yeah.
No question. But there's also an organizational, there's an organizational kind of almost politics aspect to things as well. Like, usually when larger organizations or larger investors put a position on, it was a team or a person there that was responsible for the investment. So even if people higher up in an investment firm would say, oh, have you considered this evidence and we should do this dispassionately? In reality, the group there that is actually responsible for it knows that maybe they don't know. They think if they were responsible for investing in a fraud, that I'm going to get fired. So it doesn't matter if I think the short is correct. It doesn't matter if this new information changes it. I'm locked in to my opinion because otherwise, I'm out. I'm going to get canned.
Well, it's like Freddie has made this point. I don't know if he's made this point on camera, but I've heard him say this, and I think it's spot on that when you look at the way most of these long onlys are structured, you have your PM and then you have your analysts. And the analysts, I mean, their incentives are purely just to get the PMs to buy their shit.
Yeah.
You know, there's not really an incentive for them to say, that's maybe a little risky, you shouldn't do that. You know, it's kind of it's the asymmetrical, risk return profile that, it's like the house money effectively. So that's I think that is one of the dysfunctions that underlies this. Yes.
Well, I think that's really the core thing that we've been talking about today is these incentive structures, the incentives for founders to fake it until they make it, the incentives for regulators to turn a blind eye to these things, and the incentive for investors to do the same.
How about the incentive for so-called independent board of directors to do nothing? And there's like zero independence in that title any longer. They're notionally supposed to be there to protect investors, and all they're doing is protecting their own investment.
Themselves from dealing with litigation and reputation
Yeah.
damage, maybe some people laughing at them at the country club.
Yeah, well, it's these gatekeepers that we've been focusing on, whether it's the auditors, the board, management themselves, and the regulators, and that really just leaves you guys, the short sellers, as sort of the last line of defense and the last gatekeepers in this. Are there any other participants in this that you think are fighting the good fight?
There is some media. I mean, there are some media. So
Dan McCrum. I mean, the guy's a real winner. I mean, Bill Alpert, Roddy Boyd. There are a few out there that are trying to get that story out there, but it's fewer and fewer. And there's no money in it for the people in the media. They are not the star of the show at their respective newspaper or outlet. They're really a liability for the legal team that has to defend them.
Well, based on our conversation today, it seems like these regulators, these auditors are not going to pick up the slack anytime soon. So I'm looking forward to the next short of it. Guys, thank you so much for coming back on.